Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the euro versus US dollars. We get into start the new trading week in the North American session. So let's get started. Let's focus on the hourly chart. And if we take a look at this chart, we fell sharply on Friday, falling below the 100-hour moving average, just blue line in this chart, and staying below in the last few hours of trading on Friday. And trading here today, the price moved down into this swing area defined by different swing lows through here. That was a higher floor, and then we started to make a more of a ceiling through here. So that was my swing area, and we came down toward that 106.90 level, and then kind of just waffled back and forth in the Asian session in what was a 14 pip trading range. We actually came into the New York session with or the US session with only a 25 pip trading range for the euro versus US dollar. So very small trading range to start off the week. But as you can see, we are extending to the downside, seeing a lower euro, a higher dollar. We did have a weaker than expected services PMI data come out of Europe this morning. Also, the CPI data was less than expected. So the trend more to the downside is sort of being supported by the better and slower and weaker data coming out of the Eurozone. And that may be the trend in trading here today. Recall from Friday, the U.S. jobs report came in with a stronger job growth, but a weaker unemployment rate. The unemployment rate moved up to 3.7% from 3.4%. And that helped to, that sort of that Goldilocks type of number helped the stock market, but kept the dollar supported as well. And so maybe that is what we're seeing in trading here today from a fundamental perspective. Technically, this level right here around the 1.0660 was a near a swing low here from last Wednesday's trade, and then last Thursday's trade. We did extend below that those lows through on this on Wednesday as well, and below this trend line in the same time. But the momentum could not be sustained, and the price moved back above and then based and moved higher against that 106.60 level. So that would be our next target on the downside. The risk for traders, if the bias is to turn back to the upside, would be a move back above the swing area. Above the 107.04 would be the first move, and then getting above the moving averages here would obviously increase the bullish bias as well, at least in the short term. We'll see from there. But right now, the sellers are more in control below the swing area, looking to 1.0660 as the next target, ahead of the low from last week, which came in at 1.0635. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.